Hello, welcome to a new video. On this episode, I'm gonna show you how to use momentum and how to identify it. Momentum is a really important thing that I personally use because momentum shows me that there's money behind the move that I'm trying to enter. There's many tools and many ways to identify momentum, and I'm gonna show you the ones that I personally use. I don't use them all, but the ones that I use work just fine. Well, like I said, I'm gonna show you the ones that I use and the ones that work for me. The first tool that I use in order to identify momentum is the EMAs, especially the short-term EMAs like the EMA 10 and the EMA 20. And it will be these ones right here. Why? Because the short-term EMAs react more aggressively to price. So what I want from these EMAs, these short-term EMAs, is to be constantly be surfing price, just like this. They're closer to price, they're surfing around price, and most importantly, price is holding itself above the EMAs. This shows me that there's a lot of momentum going on and that price is likely to keep moving in the direction that I want it to go. In this case, it will be bullish. So remember, in order to use the EMAs to find momentum, this is the first tool that I use. Let's jump into the next one. Is by using the EMA 10 and 20 and making sure that price is holding itself above the EMAs. Now, we're gonna jump into the board over here because it can be a bit confusing. But the next tool that I use is basically what I call imbalance. What is this imbalance thing? Imbalance is a three candle formation that shows me that there's lots of strength in the market. Now imagine there's three candles. This is a three candle formation. Okay, so there's one candle over here. It can be anything. It can be a red candle, it can be a green candle, it can be a small candle, it can be a big candle, or whatever. Okay, so we have this candle, candle number one. Then we have another candle. Usually it's a big candle. Okay, it's a big candle with a big body usually. And wicks, it can be big, can be small, but generally we have a big body in this second candle, in this middle candle, okay? Especially compared to the first and the third candle we're gonna see. Now, the next candle is gonna be like this. Again, this candle can be can be big, can be small, can be green, can be red, can be purple if you want, but this candle, this middle candle, is always going to be bullish in case that we're looking for buys, of course, in case the trend is bullish. Okay, so here's the thing, here's the rule about this imbalance. I want the middle candle specifically only to be big, and usually bigger than this first and third candle, but I want this big candle to separate this first and third candle so much that the first and the third candle don't interlap each other. What do I mean? That each other's bodies don't touch. So no wicks, no bodies, nothing is touching between this candle 1 and this candle 3. So as we can see here, let me use another color. Red will look fine with this. This high of the candle, this first candle, doesn't overlap with the low of the third candle. Okay, so it's basically the high of the first candle is not overlapping with the low of the third candle. Okay, so this will be what I call imbalance, and this show me there's lots of momentum going on. So whenever I'm seeing a chart, let's go back to the chart. I want to see imbalance. I want to see candles that are showing me imbalance. For example, we can see imbalance over here. This will be the three candle formation. Number one, first candle can be bullish. Yeah, can be bullish, can be bearish, can be red, blue, black, whatever. Now, the second candle, look how this looks. It looks big body, usually smaller wicks. They're just full of strength. And let's see the third candle. Again, it can be anything, can be black, blue, whatever. And we can see that the middle candle separates this first and third candle so much that the low of this candle doesn't touch or doesn't interlap with the high of this candle, and is creating a big gap. Seeing this so much in a chart shows me that there's lots and lots of strength and the price wants to keep going and going and going. Okay, we can see another imbalance here. Let's erase this. We can see another imbalance over here, right here. First candle, it's black, so bearish in this case. Now, second candle, the big one, the one with the big body, and now the third candle over here. And see how this middle candle, this second candle, separates the first and the third candle so much that the third um, low of the candle doesn't interlap with the high of the first candle. And here will be the gap. Okay, this is another tool that I use, and if you use it wisely and with multiple confluences, this will work wonders. Trust. Now, the third concept that I use in order to find good momentum will be agreement through timeframes. Okay, what do I mean by this? When I say agreement through timeframes, I mean that, for example, if I am on the daily as my higher time frame and I'm on my 90 minutes as my middle time frame, and then I am on the 15 minutes on my smaller time frame. I want to make sure that there's agreement through time frames. I just don't want the daily to be, for example, surfing with the emas only or seeing imbalances on the daily. I also want the 90 minutes to be agreeing with what the daily is telling me, and I want to see the same thing. I want to make sure that on the 90 minutes price is also trending and it's agreeing with my daily time frame. Okay? Now the 15 minutes I usually see it a bit different because it's my entry time frame. So I'm allowed to enter on a tougher spot. I want to catch the move, so I don't have to wait for this to happen. My 15 minutes often looks a bit like this, a little bit of lows, price plays around for a bit, and I enter on the break of a high. But my recommendation to you is that don't only use a one time frame to decide the strength of the trend or whatever, but use multiple time frames that are agreeing with each other, telling you that price wants to keep going in whatever direction you're analyzing price. We want to get involved in these areas on the lower time frames. We want to get involved in these areas on the lower time frames, okay? Getting involved in places like this in sideways markets when the market overall on the daily, on the 90 minutes, on the 15 minutes, on every time frame is telling you, I don't know where the fuck I'm going, please don't enter. And what do? You enter, get stopped out, you enter, going the wrong way, get stopped out again, you enter, you get stopped out, and the cycle continues, and now it's a whole bunch of nothing. So like I said, you want your multiple time frames to be in agreement and you want order to all of them, not only with price, you also want it through the emas and all the other concepts that you may use. Now there's actually a fourth concept that I use, and that is supply and demand zones. Supply and demand zones are basically just places where there's either strong buying or selling pressure. And supply and demand zones are usually formed by two candles. One, in the case of buys, red candle, and the other one will be a two green candle. This green candle always, and I mean always, has its body, which will be this. Everything that's not the wick is the body on the candle. Everything above the body of this second candle, it's surpassing the high of this first candle. So what you will see on supply and demand zones is that it will usually, the second candle will be very strong, just like this one, and that the body of this second candle will surpass the high of the first candle. So this is basically a supply and demand zone, and is usually followed by a strong move up. And also, you will also see that after the supply and demand zone happens, often you will see the gaps happen. So for example, let me erase this a bit. Let's just make another example. You can also see that usually after a supply and demand zone, there will be gaps, just like this. Let's see this candle over here. Let's make it red just because. And then you will see a big candle. Maybe we see another green candle over here. And as we remember, the gap that is created, the imbalance by the first and third candle created by this middle second candle full of strength and its body is usually big, makes the separation, makes the gap in order for this first and third candle, this low of this third candle and this high of this third candle do not overlap each other. And you can see that the gap is right here. So all these concepts kind of come all together because where you see gaps, you will see supply and demand zones. And where you see supply and demand zones and gaps, you'll probably also see that the EMAs or price is holding each other above the EMAs. Why? Because all these concepts just come together and they're used for similar things or for the same thing. So when one is present, the other will usually also be present. Now let's analyze a bit of this trade. A bit of the trade that I took yesterday right now is ongoing. Well, let's analyze how I saw it personally. Okay, so for me, I saw that let's erase these drawings. I saw that the daily was coming off of accumulation, sideways market, as you can see over here. I saw that it was coming from accumulation, sideways market, whole bunch of nothing, and it looked ugly. Okay. Once it reached around this point, I started seeing a little bit of something. And once price got over here at these points, I saw that it could potentially keep going and trend hard. Okay, this is the daily. Then I went into the 90 minutes to see more of a better view of the lower time frames. And what I saw was that at this point, price was surfing the EMA 10 and 20. The market was about to start. So I entered at this point, set my stop loss below the low, because in my opinion, if price went below this low, my strategy will be invalidated. So what do I saw? I saw a bunch of gaps over here, over here, over here, over here. So this means there's lots of strength coming in the market. The moment that I saw this, the market was about to start. I set my entry over here, price dipped for a bit, then reacted, set my stop loss to break even, and at the moment it's ongoing. This is how I apply it in the real market. Thank you guys so much for watching. I hope you enjoyed. Make sure to comment. If you have any doubts, feel free to comment them, and I'll see you guys on the next one. Peace out.